Good evening, everybody. My name's Max. My station's name is the Covered Collar. My little dog's name is Jax. Jax is the co-host tonight. You want to come say hi? Come say hi. Come on. Come say hi. Come here. Come here. Jackson, come here. I got a treat. I got a treat. Come here. All right. Um, he doesn't want to make an appearance. All right, guys. Hey, I was gonna pre-record the Daily Factor show, and I decided just to it's just not working out. I decided just to do it live. And I tried to record it twice and I kept messing up, and it's kind of a weird show tonight. But in any event, all right. Let's get this show started. So um I was going to say, after I do this show, we're going to do the regular live stream. Ask me anything. We can talk about whatever. But first, let's check out the Daily Factor. So welcome to episode 5 of the Daily Factor. Now, the Daily Factor, for those of you who don't know, is my own proprietary metric that looks at the risk-adjusted reward of these high-yield funds in a novel way. Now, these high-yield funds, the yields are so high they broke the traditional Wall Street metric, and they're busting out of the matrix too. You could say that as well. The traditional money managers and stuff will tell you to look at total return, and total return is great. That's one way that's definitely good advice. You should look at total return, but just looking at total return itself can be deceptive, and it can kind of lead you astray in high yield funds because they do something different. They have a different, because they return money in a different way. So it kind of throws the risk and reward equation into into chaos, let's just say. So think about this. You have two ETFs. You have ETF A and ETF B. They both have 50% total return. So traditional Wall Street would say, hey, they're both as valuable. They both have 50% total return. So that's how your money compounds, and so that's great, right? Well, and that is true, but let's say you have ETF A, it has 50% total return. Let's say it's during the year, though, its NAV was down 90%, or let's say its NAV was down 50%. I mean, don't want to make it that obvious. So the NAV was down 50%. It finished the year down 50%, but it paid 100% yield and it had a 50% total return. Well, that's pretty good. I mean, that's really good. Well, ETFB, its NAV was actually up 25%. But it only paid a 25% yield. So it still received a 50% total return. They both arrived at the finish line at the same place, but it's how they run the race. You can look at both total returns at 50%, and that only tells you part of the picture. We can see a lot more kind of behind the scenes with the max factor. The max factor tries to identify companies that are a good risk to reward basis, and they try to identify opportunities to get as high of a yield as possible, but as high of a yield at a reasonable price. You've heard of the investing philosophy for growth investing, GARP, growth at a reasonable price. Well, this is DARP. This is distributions at a reasonable price. All right, so without further ado, let's get into this show and let's talk about our contestants. All right, let's just line them up alphabetically. Well, now we're going to meet our contestants and look at the yield, because the yield is the most fun to look at. It's also the most deceiving. The yield can be deceiving. It's a lot better to look at total return than yield. Yield's the worst thing to look at. Total return's the second worst thing to look at. And the best way to evaluate these is with the max factor. The max factor is kind of like Morningstar for a new generation of funds. All right. Now, these funds are more complex than the ordinary funds, but so it's going to take a little while to kind of explain some of them. All right. So our first contestant, well, not our first contestant, the highest yielding fund on our list is something called CCIF. CCIF is from Carlyle Group. Now, the Carlyle Group has a reputation as masters of the universe. Carlyle is private equity, old Wall Street, Illuminati as it gets. I mean, I want to say Bush's brother is a partner at the Carlyle Group, and other people. I want to say John Kerry. These guys have political connections out the wazoo. Well, anyway, they're also in private equity, and now they have a fixed income fund. I just like to throw in the other interesting stuff. But yeah, these guys are ballers. I mean, they're like BlackRock or whatever. You just never hear of these because it's more private equity. You don't hear about Carlyle like you hear about BlackRock. Well, anyway, even these old Wall Street Illuminati types are getting into the ETF space, or in this case, I think probably a closed-end fund. Yeah, it is a closed-end fund. So anyway, it's called the Carlyle Credit Income Fund. And I would imagine this is probably a portfolio of like high interest loans. And anyway, it pays 24%. Now the NAV, I mean, that's, the NAV is kind of a familiar pattern for some of these high yielders that we look at. But in any event, that's our first contestant. And it's yielding the highest out of all of the ones we're looking at. Let's see who we have next on the list. So the second highest yielding and our second contestant, there's about 12 contestants tonight. Maybe I'll zoom it in a little bit. Can I do that? Hang on a second. Yeah, there we go. All right. Our second contestant tonight is CLM. Now, this is one that I know you guys will be familiar with. It's Cornerstone. It's also a closed-end fund. Doesn't pay quite as high of a yield as CCIF, but it has a special feature where it drips at NAV. So if you're on drip, you can get more points out of it. However, I don't figure NAV, and we're just looking at all these kind of like on an even Steven basis. Maybe some of these other closed-end funds could also be dripped at NAV. I'm not sure, but I just always look at we're going to disregard that. But I do realize, that your actual yield could be a little bit higher. But anyway, 17.47 is pretty good the way I look at it. Next, we have XV. Now, XV is a barrier fund, and it's from Simplify. And I think I have an explainer up here for barrier funds. We have XV and SBAR. They're stablemates. And we're going to take a look at those really quick. So these are called, like I say, they're called the Simplified Barrier Income Fund. This is like a mix between a bond with like a put spread overlay, or it's like a bond with a buffer overlay on it. In other words, this bond's attached to the performance of the market. So SBAR is a 30% buffer. I'm trying to find this. I had an infographic here. Yeah, okay. So SBAR, so monthly income through selling barrier options. It's a barrier option, but it's like I say, it's a mix between a buffer fund and a fixed income fund. So basically, this is a bet that the market doesn't drop more than 30%. SBAR has a 30% barrier. There's a downside barrier. As long as it doesn't drop more than 30%, your NAV has no ill effects, and you get your coupon. You get your monthly payment. Then there's another one from these guys called XV, which means like the Roman numeral 15. Same thing as SBAR, but it has a 15% barrier instead of a 30% barrier. So it has a smaller buffer. So, but it's a little bit riskier. So therefore it pays a little bit more. Well, anyway, barrier options are, I don't know that much about them. But that's one more way to get. It's another alternative for income. Let me tell you this, and it's something that till now people don't do. This is an institutional type strategy. I think all of these are. These are true liquid alternatives. Now, liquid alternative generally applies to the class that covered calls are into, but covered calls have been so commonplace, and retail does do those a lot. I mean, they are still considered liquid alt, but these are the really alty liquid alt. Not ULTY, ALTY, the really hardcore alternative, things like this barrier fund. But yeah, so it's like a buffer fund. You don't have any ill effects unless the market drops more than 30%. It's tied to the stock market, and they execute. They have different bonds that have different ladders. So it's not like you're betting all on the market not dropping 30%. They may sell a different option every month, but every month you just want the market to be steady or go up. All right. So it's a bullish bet on the market. So that is XV and SBAR. So they're saying right here, SBAR's use case is higher level of monthly income than fixed income. And it is higher than a bond with defined barrier levels. So speaking of that, let's go back and SBAR pays an 11% yield, really 12%, and XV pays about a 13.6% yield, but you don't have as much downside buffer or downside protection. So in any event, next we have YYY, and YYY is from Amplify. And this is a closed-end fund. And I think it's a closed-end fund of funds. It's rule-based. They say they have, it's 60 closed-end funds based on a rule-based index. They put their own index together and manage a portfolio of closed-end funds. So that could be interesting. And it is yielding, YYY is yielding 12.29. All right, then we have CAIE. Now this is from Calamos. We have two entrants from Calamos on here. One of them is my favorite, and one of them is one of my friends from Discord's favorite. But CAIE is the friend's favorite. Now, this thing is, let's see, I pulled this up here. I swear I have it up somewhere here. Here it is. These things are called auto-callable bonds. This is kind of similar to a barrier option. This is, once again, it's fixed income investment, but it has an element, it's attached to the stock market. On these auto-callables, they sell a different auto-callable bond every week. So they're building a ladder of these things, but they also have a big buffer. I think on this one, the bet is you don't want it to drop more than 40%. Yeah, that's what it is right there. In other words, your NAV's fine unless the market drops more than 40%. So it's another form of fixed income. You get a little bit better, or you get a lot better yield than you do from regular fixed income, and you also get exposure to the market in a good way with the downside buffer. So that could be a nice one. Also, that's called CAIE, and that one is paying 10.7. That's respectable. Next, we have STRD from Strategy. Now, this is a preferred stock, and there's three of these on the list. There's STRD, STRC, and STRK. They all have different specifications, and different features, let's just say. And we aren't going to really go in depth into those, but let's just look at how they do. STRD paying 10.2%. All right. STRC is paying we'll call it 10%. We'll give them the 2 basis points. All right. And then there's STRK paying 8.6. All right. Then we have FIAX from our friends over at X Funds, at Mr. David Nicholas. And now this is a fixed income alternative, and this could be an interesting investment. And I thought it matched well with the other ones in here, so I put it in here. It's paying about 9%. Good job. We'll see how it does. Then we have CEFS. This is from a company called Saba, I believe. This is similar to YYY. It's a closed-end fund of funds, and Saba manages it for you. Then we have Riser. Now, Riser is one I've always been interested in. I've talked about it multiple times. The first time I met Mike Venuto, this is what him and I were talking about, because I was really interested in this fund. It's not YieldMax or anything, and it's a company I don't think I've heard. I'm trying to think of the name of the company, but anyway, it's sub-advised by Tidal, and it's one of Michael's babies, and he's really proud of this. And we talked about this. It's fixed income also, but it's definitely in the liquid alternative space. It's because it's a special kind of fixed income. Most fixed income funds are relying on are a bet that interest rates will stay steady or drop. Okay, now Riser is a fixed income. You get a coupon or a monthly payment, and it comes out to about 5.79% a year. But it will also, the NAV of this thing will go up as interest rates increase. This thing cleaned up in 2020 and 2021 and into 2022. This thing cleaned up. So it's a good hedgy type investment. In fact, I'm going to get this next time I think rates are going to go up and I'm worried about rates, I'm going to get this. And you can get this coupon and at the same time have a little protection against inflation. Usually when inflation goes up, rates go up typically. So in any event, Riser's interesting. It doesn't pay a huge yield, but I mean, that's really important to be able to profit as rates go up. And that's not the typical configuration in these types of investments. All right. And then we have SSK. I forget the name of the company, but this is Solano Staking. So this is DeFi as it gets. It's the staking scheme is paying 5.7% right now. Then we have my favorite. Now, this is from Calamos. Now, yeah, it's only paying 4.9%, but let's see. I brought up an explainer on this too. This is called the Calamos NASDAQ Equity and Income. Okay. But what I like about this is this thing has uncapped exposure to the NASDAQ. That, you guys, nothing gets me going as much as uncapped exposure to tech stocks, uncapped upside exposure to tech stocks and synthetic options. And this has that in it too. So what these guys do, it has two components. So they get NASDAQ exposure. They don't buy the stock. They don't have to buy NASDAQ stock, but they buy a NASDAQ synthetic, probably a combo. They buy an at the money call and they sell an at the money put with the flex option, so it can't be exercised early. Then they basically have full exposure to the NASDAQ. The thing is, putting on those combos is cheaper than actually buying the stock. So they'll go buy this combo. They have 100% upside to the market and probably 100% downside too. If it's a combo, they do. They just have exposure to the market. Well, the thing is, it doesn't cost as much to do this as stock. So they take all the money they save from not having to buy stock, and then they put it into the second part, which is the fixed income sleeve. And so they have uncapped upside, and then they're getting fixed income. Well, they have some higher yielding fixed income and everything too. So then what they do is they take some of the fixed income money and they use it to buy puts, on the S&P or the NASDAQ. So they don't have unlimited downside. They buy puts, so they cut off their downside. But unlike doing a caller where you're selling a call to buy a put, they don't sell any calls. They just use the fixed income to finance the puts. And they use the fixed income for two things. They buy puts with some of it, and they also pay you the distribution, which is 5%, 5.79% or whatever. This is a fascinating idea to me. It has asymmetric risk and reward. I mean, this is my favorite. I'm pulling for this one. I'm just going to say it right now. So that is CANQ from Calamos. I got into this one about 6 months ago when I first learned about the lightning spread, or actually a year ago, and I started to want to study. I was looking for other funds with uncapped upside other than the lightning spread. And there's a few of them out there, and this is one of them that I found back at that time. Anyway, so that's the one I'm pulling for. And then we have SCHD. Okay, well, SCHD pays the lowest yield. It's the Schwab dividend fund. It's really popular, big fund, and it's done well over the years. Lately, it hasn't been doing as great as it had been doing historically, but in any event, I thought this is the least alternative. In fact, this isn't a liquid alt. This is just, but I wanted to compare. This is also kind of where I just throw in the things we're never going to look at. I mean, otherwise, so I decided to throw SCHD in there as well, even though it's not quite a great fit. Okay, so that's our first round. We have the yields and we have the names of our contestants. Next, we're going to look at the prices and the volatility. I'm going to stop by and say hi to everyone first. Make sure everything's going all right in here. Make sure no one's misbehaving. Thank you so much for being here. Yeah, Marcus, I know you're here. We'll see how yours does. I say mine's going to whip yours. I could have fixed the contest so I'd make it with it, but I would never do something like that. But I say I'm CANQ all the way, baby. I'd wear a CANQ hat if I had one. If it only paid a little bit bigger yield than 5.79%. Anyway, thank you guys for being here. Thanks, Michael, being here from the Philippines. I appreciate it. It's probably in the morning over there. Carl's here. Thank you, Carl, for being here. Yeah, these are some different ideas. This is definitely liquid alternatives. That was the big buzzword a few years ago in the high yield industry. It's not only covered call funds. The big thing was liquid alternatives. And it just means stuff that basically, to me, a liquid alternative is something that institutions used to do, more kind of crazy, complex strategies that after the 2019, I think the derivative rule, they changed the derivative rule for ETFs, letting ETFs have more freedom to use futures and things like auto-callable bonds, but especially futures and options. And it just opened up the industry to all these things. And I'm so laser focused on the option part of it. Sometimes we forget about these other alternatives, and this can really work. Now, look, I have Marcus. He's admitting. He said, I admit, Max, you're smarter than me now. He said, Max, I admit, CanQ is the best NASDAQ. Yeah, it looks really good. It really, and I kind of like I like SBAR and XV. It pays a little bit higher yield, and it does some of the same stuff that the Calamos does. Anyway, let's just get back to the show, see what's up here. So at this point in the show, we're going to look at the volatility, and we can also look at the price. But CCIF, like I said, I didn't have time to read. I should have researched this. I bet you this is just kind of like, I bet you it's a loan portfolio that pays really well. So anyway, just kind of from the name of it, and whatever it is, like I say, these guys are masters of the universe, Illuminati guys. Well, CCIF, oh yeah, what we're going to look at is NAV return now. I'm sorry. Then we're going to look at volatility. All right. So, well, let's actually just sort it by best NAV return. Well, would you take a look at that? I'll be darned. The best NAV return, and it's the one Max likes. Heck yes. Heck yes. All right. CANQ up 8.3% on NAV return. Basically went from 29 to 31. We'll take it. CAIE, the one that Marcus likes, is up 7% on NAV. We're right there neck and neck. And look, Marcus has me beat on yield too. Marcus's fund is paying about twice as much yield as mine. All right. Next we have STRC. It's a 5% NAV return. That's respectable. And we have CEFS, 3% NAV return. That's not bad. Then we have CLM. I mean, it's just 3% NAV return, but you combine it with a 17% yield, and that's before dripping a NAV. Granted, that's pretty, that can play a role in a retirement. Then we have XV, and if I had to pick one other than CanQ or I like CAIE also. I'm just giving Marcus trouble, but if those two are really good, but I think XV and SBAR are interesting funds too. So anyway, XV had a little bit positive NAV return and returned 13% in the form of yield. So, steady NAV, then you get your yield. SSK, the Solano staking one, had, the NAV's up, and that's pretty good because DeFi's kind of been in the dumps lately. Maybe not the last quarter, but the last 2-3 weeks, it's pulling back. So that's impressive that they managed to keep a positive NAV. Then we have SCHD. Now, this is based on the stock market. Now, the big advantage to this fund is it doesn't pay much yield, but you own stock. So you have uncapped upside to the stocks in the portfolio. Lately, for whatever reason, these haven't been doing quite as well. I mean, heck, it's only up 1.1%. And that's NAV only. That's without considering the dividend. And this has been, for stocks, it's been a face-ripping bull market. I mean, they're still pretty close to the high, but crypto's been pulling back lately. But so that SCHD, it just kind of, it's off its game, let's just say. Then we have YYY, and this is from Amplify. So this one has flat NAV and pays 12%. That's all right. Then we have SBAR. So this babe is making about 12%. I like this one also. Flat NAV making 12%. We'll take it. All right. Then we have FAIX, and that one, we're going to call that flat NAV. It's just down 1% and is paying 9%. We'll give David Nicholas the benefit of the doubt. But then after there, Riser's actually down a little bit on NAV, and that would make sense because interest rates haven't been going up. Interest rates have been going down lately, and this is kind of has the opposite sensitivity to interest rates. Then we have CCIF, which is the loan fund, I guess. Now its NAV is kind of hurting, but I mean, it's only down 5% and it pays a 24% yield. I mean, that could still work. I mean, it just depends. Then STRD is down 8% on NAV and only paying a 10% yield. Now we're getting kind of in trouble here, but it hasn't had a best quarter. Now remember, these three preferred stocks, they're all attached to MicroStrategies, but they have different levels where different things kick in, different specifications. So on what has to happen and what happens if A happens, this happens. Anyway, so MicroStrategies has been in the dump. Strategy's been in the dumps lately. So it doesn't really surprise me that these are down. I will say this. I think STRK is the bets on that it needs MicroStrategies to go over 1,000 or something. This is the most wildly bullish one. So that's why their NAV's pulling back, because MicroStrategies doesn't look like it's going over 1,000 anytime soon, right? Doesn't to me. Now, hopefully I'm wrong. What's really impressive to me about these three strategy funds is this, is that this one right here has positive NAV, 5%. And it's paying a little bit less yield, but that's impressive. It's doing a lot better than its stable mates that are bleeding NAV, especially STRK. All right, so now we're going to go to the final category before we reveal the winner. Let me zoom in. Let's see. We're going to look at volatility also. See what, and we'll line it up by most volatile. Let me zoom in. Okay. The most volatile is SSK, Solano staking. Go figure. Okay. 65 on volatility. That's like 5 times the broader market. So that's like 5 times as volatile as a SPY. So that's going to be a crazy ride up and a crazy ride down. Now we have STRK, the one I was saying. I think it's the one that's the most wildly bullish, and that would make sense that it would have higher vol than the other ones. It's a 25 vol. That's not just too bad, but it's about 50% more volatility than the NASDAQ. So it's something to consider. CCIF has a 19 vol. That's reasonable. That's about like the NASDAQ. STRD is a 17. These other ones are, reasonable vol, NASDAQ vol, CAIE, CANQ, and of course the CANQ is based on the NASDAQ. So it makes total sense that it has, about that type of vol. But then we have CLM at 11.9. That's more like SPY volatility, even a little bit less. That's pretty good. That's pretty safe. And I think that's why a lot of people like it. You get safety, you get NAV upside, and you get a decent yield, and even a more decent yield if you drip it at NAV. All right. Well, then we have XV, 13%, but yield, but it's super unvolatile. It's only a 9 volatility. Anytime you get to single digit volatility, these are super steady. Then we have SCHD, that's also a 9 on volatility. Then we have SBAR, that's a 9 on volatility. Then we have YYY, that is a 7 on volatility. Then we have STRC, that is also super, super steady. And this is also the one that's up 5% NAV. So this STRC is impressive. This is kind of the sleeper of the night. And this is the reason I do this show. When we do the Saturday show, we see the same 20 funds or the same 40 funds. They go in and out, but we're always talking about Palti and Hui and, the round hill leveraged ones and those are fun, but we would never see some of these other ones and discover these diamonds in the rough. This is Diamonds in the Rough Thursday. We'll start doing this every Thursday. Thursday will be for closed-end funds and the real alternative type investments. Speaking of closed-end funds, we have CEFS paying a respectable 8.2%. It had good NAV return, and it's only a 6.9 on vol. It's half as volatile as the SPY. I mean, that should be a super smooth ride. And then we have Riser, also very low volatility. Good job. And then we have FIAX, and is the most steady of any of these. But it's just a bond portfolio. It's a really safe bond portfolio, but it's not just any bond portfolio. It's an actively managed bond portfolio by David Nicholas. And I mean, he's a sharp dude. And I know that I bet a lot of you guys like blocks. I really like blocks. But also he has GIAX, which is a global hedged equity fund. That's a good fund too. I wasn't going to put it on this one because it's more, it belongs on a different show, but I guess we could have put that one on this show too. That may not have, maybe next Thursday we'll put GAIX in also. Okay, so I'm going to come back and let's see. I want you guys to pick which one is your favorite or which one do you think is going to win, or just tell me which one you want to win. Hey, Ambassador Kwan, thank you for being here, Jonathan. I appreciate you. I did. The iPad's charging right now. I have a great picture on the iPad. I'm going to show it to you. I was going to show it last night. I got a super clear picture. For some reason, I have some kind of, it's a technical problem. I'm just going to show it to you. Hang on. We'll look at that in a second. I'll see that in a second. But absolutely, oh my God, that buck is beautiful. Let me try to stay on topic though. Okay, so let's see what we have right here. So we have Panma. I haven't seen you around in here before, but thank you so much for being here. You say SBAR. I like SBAR. I mean, I do. I like CanQ more, but CanQ pays kind of a low yield. I don't know. I mean, I'm kind of a yield chaser. If you want a little bit more yield, you're going to have to go with one of the other ones. But CanQ has that full uncapped upside to the market. Look at that. Well, check this out. So let's just go for the quarter. CanQ to SPY. So CanQ is beating the SPY. Now, granted, it's based on the NASDAQ. It's probably not being the NASDAQ, but the SPY is the broader market. It's beating the broader market. But what's even more impressive about CanQ is because they use part of the fixed income sleeve to pay for some downside protection. When the market dropped, you could see the SPY dropped a lot further. The SPY was down about 15% in April, and it appears like this one was down about 8%. I think I looked it up earlier. It was down like 8.5%. So it has about half the volatility as the market on the downside. So you have asymmetry. That's why I like it so much. But you have pretty much full upside to the NASDAQ, or you don't really get close to full upside. Let's just run this CanQ against the Qs really quick. I bet the Qs have it beat. Yeah, but still, you get a lot of upside and you have downside protection. It looks like you're getting 80% of the upside and about a third of the downside because the NASDAQ dropped about 20% and this dropped 8.5. So you get a third of the downside or 33% less downside and only 20% less upside. Huge asymmetry. Okay, so I'm saying CanQ for me. CanQ's mine. Marcus is CAIE. He's loyal to his be true to your team, right? Okay, here we go. You guys ready? I wonder if we should go from last to first or we'll just go from first to last. All right. What do you guys think? It's a 6.9 vol. First place is a 6.9 vol with a 5% NAV return. It went from 94 to 98, yielding 10%, and it's from strategy. Look at that. STRC. Wow. That impressed me. I would have never known about this one. I mean, that's had a heck of a quarter, especially when you consider it's attached to strategy. That's pretty impressive. Number 2 is CAIE from Calamos, the auto-callable bond portfolio. They run a ladder of 52 bonds. They sell one every week. So like one bad, week or month in the stock market won't kill the whole fund. It's a laddered exposure. And you can see here, the reason they did so well is they had reasonable vol, good NAV return, even better NAV return than the preferred fund from strategy. And they had, went from 25 to 27 and paid a 10% yield. Heck yes. I mean, look at CLM, went from 8 to 25. So the NAV, went up about 2-3%, but paying a 17% yield. That's pretty dang good, especially when you only have market vol. So it's not good. It should be a smooth ride. You should get decent yield, or at least you have been, and decent NAV return. Now, not as much NAV return as CAIE. CAIE is a monster. But anyway, then we have fourth place is CEFS. Okay, this is interesting. Wow. So basically no volatility. Positive NAV return. It went from 22.18 to 22.88. So it's up 60 cents or whatever. I mean, 3%, we'll take it. All right, and then there's the best one. I mean, this is rigged. I'm asking for a recount. This is rigged. This is a rigged election. Gosh darn it. Look at this. I mean, come on. The NAV went from 28.69 to 31.07. That's 8.3%. What more do you want? Look at all that upside all day. But I say, what more do you want? I guess what more you would want is it has reasonable volatility. It's SPY volatility. So volatility is fine, but I guess what more you would want is right here next to the yield. Anyway, so it's a good one, a little bit low on the yielding side. Then we have XV. XV is the barrier fund from Simplify. Really good vol, good nav, good everything. These ones that are at the top, they have the full thing. They have good everything. That's the whole idea. Why? Very, low vol, flat nav, decent yield. Then we have SBAR. Yeah, SBAR is a good one. Low vol, flat nav, decent yield. SCHD, vol, flat nav, decent yield. These are just all kind of a little bit lower on the yielding side of it, but these could play a part. Now we have SSK. Now this one is a mess. I mean, it's at 65 on volatility, which means it's been all over the map. Let's just look at it here. Let's do SSK to CanQ. It hasn't been out that long, so that but you could see it's just one of those. It's just one of those. I mean, it's just let's compare it to something else that has high volatility. Let's compare SSK to Mister or to Coney, or it could be or to Misty or whatever. Anyway, it's not. It looks way more volatile than Mister, but I meant Misty. I meant Misty or Coney or something. We could compare it to MST, which it has more vol than anything in the world. It's like a 99 vol, double leverage micro strategies. Yeah, you could see this SSK is pretty volatile just by eyeballing it. Okay. Back to the show. All right, then we have Riser, yielding about 6%. NAV's, down a little bit because rates are going down, unfortunately. But, oh well, this could play a role too. Then we have FIAX and Stride and Strike and CCIF kind of bringing up the rear. Strike just had that poor NAV performance. And if you look at Strike, it kind of explains it because I forget exactly which one's which of these three micro strategies. I did a show a week ago or something, but I think Strike's the one where you're looking for way higher prices. I think it has a 1,000. It's basically like an option with 1,000 strike price sometime in the future. So yeah, I think that's what it is. Correct me in the comments if that's wrong, but that would make sense. And that would account for the higher volatility because you're taking a riskier bet. STRD is probably kind of a mix of the first two, not as safe as the first one, but a middle one. Anyway, I'm sure that the people that are interested in those funds already know all about them, but I just wanted to give us a broader look at the behind the scenes. And these are, legit funds. And we never even hear about these. I'm really surprised that STRC is doing so well, but looking at the numbers, I mean, I get it. I mean, what more do you want? I mean, I guess you could have more yield is the thing, but I mean, against the other funds in its same class, it's very competitive. It's very competitive. And now that, I say I like CanQ, but after watching all of these, I may have to get some CAIE. I mean, this thing is really good. And I could always get CLM too. I mean, CLM or CAIE would be a great addition, in my opinion, for my model portfolio. I have cash right now and I'm doing a third quarter rebalance. I may need to look at some of those. And I should have listened to Marcus. He told me probably 6 months ago, you got to get this, you got to get this. And, but I didn't say I hated it. I just said, I don't really understand it and stuff. I'm going to watch it. So anyway, it's always good to kind of know what you're investing in. But that's also why I invented the max factor, because there's 154 of these and I can't keep up with all of them. There's ones I haven't even heard of, or I've heard of once and then forgot, but that's the max factor, and having the list and everything and looking at it every day. If one's going up the charts, making a lot of money, we'll find out about it on this. Okay. What did you guys think about the show? Surprises, disappointment? What's Ambassador saying sorry for? All right, let me go back and try to catch these sequentially. 28 of you here. Okay, I was overwhelmed today. I thought that my channel went viral when I had 221 people on there. I couldn't believe that. And I was totally out of stuff to say, stammering and stuttering. I mean, I know I always stammer and stutter, but you guys are used to that. When there's the same 20 dudes here, it's no big deal. But when I was 221 people, and I was trying to think of something smart to say. Well, anyway, I couldn't believe it. I thought I'd gone viral or something. Well, I get off and I check my Twitter feed, and the reason it happened is because Retire on Dividends retweeted it and said, check out Max's show. He's an option bro or something. And then Retire joined the stream. But that is, I have 50 on my own. We have 25 to 50 every night, but those other were Retire brought with them. And I really appreciate it. But so they won't be here tonight. I mean, unless Retire retweeted it again. But maybe someday we'll start having 200 consistently. I kind of like it when we don't, so we can have more of a back and forth conversation. But yeah, somebody was griping before that it was too hard to see. I think it was Taz or not now. Somebody last night said it may have been you, Easy Life, said it's too hard to see. I need a zoom button. So what I did also, the reason I did that is I didn't want to give away. I was zooming it so the max factor wouldn't show up. I need to make it where this one's hidden before, but because I like showing the interact, and trying to guess. I think it makes it more engaging to do it like that. So I zoomed in. I was trying to zoom in also where we could see everything, but I was also doing it to obscure the last column. But I think that's pretty good right there where you can see. I mean, I think this is how I'm going to do it. Or next time I'll design the graphic to be this size, and I'll make the last column hidden until we expose it. But yeah, I thought this was fun. I thought this went better than, like I say, I tried to tape it twice and both shows went terrible. And I was like, I'm just going to do it live. I think I'm better talking off the cuff than unrecorded. I mean, I just like to talk off the top of my head. So, but yeah, that's why I zoomed. I wasn't trying to hurt anyone's eyesight. Okay. So what am I missing here? Thank you, Mike, for asking for the thumbs up. I appreciate that. We have a screeching possum in the house. Yeah, I'm always misbehaving too. Marcus admits the can cues. Marcus and we make a good pair because he's admitting my pick does have some value or whatever. And then I'm having to admit that, yeah, his has more value. I may even have to get some CAIE. I mean, we need to get with the auto-callable revolution. It's not like that's one obscure fund. Auto-callables are the next big thing. I mean, I think somebody's coming out with a whole suite of them. Maybe Kalanos, but I think it's somebody else. I mean, the auto-callable is supposedly kind of, the next hot thing from what I've been hearing. Jonathan already said hi. By the way, I saw your post. Okay, yes. We're going to look at the big buck. Let me just get through with this. Don't know about screeching possums that CANQ are just interesting. Yeah, they are interestingly designed, especially that CANQ. It's amazing to me. I wonder how much downside protection they really have, but we kind of saw the answer to it. It looks like they get about a third of the downside compared to the NASDAQ because it looks like their bonds pay about 10%. Okay, here, let me show you this. So here's their portfolio of bonds. And just by eyeballing them, okay, so they have the simplified mortgage-backed securities. I bet that pays, I don't know, what didn't be a 10% or something. Vanguard emerging market governments, that probably pays, a 7-8%. Spider high yield bond portfolio probably pays 8-9%. Janus closed end fund ETF. I don't know. Franklin senior loans. Senior loans could be good to kind of boost your yield. Then they have NVIDIA for some reason. NVIDIA doesn't pay a yield. I guess they own some stocks too. But anyway, but then they have Schwab, and they have the Schwab corporates, and they have the investment grade corporate. So all I can figure out is they're making, because they're paying a 5.9% dividend, but they must be making about 10% to have enough money to buy those puts, or they're making some amount more than 5.9. Because if they're giving you 5.9, I bet they're making about 9% from their bond portfolio, and they're using the rest. They probably ladder puts every month. They probably take their, part of that and they buy a put option. Anyway, whatever, the results, speak for itself. It got about a third of the downside in April. And granted, even though it has uncapped upside, for whatever reason, it's not achieving the upside. It could be that they use a deep in the money option instead of a combo, and the deep in the money option has a little decay with it. So, I need to do a show on this one. a review. But yeah, when I discovered this one a long time ago, here's the trivia question. Besides this one, there's only one other uncapped upside fund I know of that pays an income. And that is until the lightning spread came out. And now we have blocks and whatever. But anyway, it's called overlay ETFs. These guys, liquid strategies, yeah. These guys have been running lightning spread strategies. They're owning stock and selling puts since like 2021. And I forget the ticker symbol. I think it's called, but they have several of them. And these guys have uncapped upside also because they're doing lightning spreads. We can talk more about lightning spreads. That overlay series isn't that interesting, but look that up if you're interested in it. I think the thing is it pays kind of a lower yield and they just pay quarterly. So it's nothing that you guys are going to be interested in. My point is though, when I first found out about the lightning spread a year ago, I went down the rabbit hole looking for funds that had uncapped upside. And that's why I love CanQ, because it's the best of both worlds. You have uncapped upside. So it's like blocks on the upside or a lightning spread on the upside. But, it cuts off some downside with the put options and it pays you a little yield. I mean, that's a really good fund. That is a really good fund. I really like that one. All right. So now we're going to do the normal live stream. So if you guys can ask me questions or whatever. Let me put the comments up in the screen so you guys can see what you're saying to each other. Oh, it says show comments. Oh, you guys, they're on there. I didn't know they were on there. Sometimes if I make them bigger. Anyway, so you guys can see those. Okay, I'm going to show you the buck, but let's look at the bucks. That's fun time. Let's get business taken care of first. So let's look at the market. It looks like Bitcoin's bouncing. Thank gosh, because I bought the dip and I got right at the end of the day. And it's hopefully this trend line holds. Now, this is a longer chart than we usually look at. This is a 4-hour chart. But heck yes, come on. Come on. If this is the one thing that could fix Alti. People are always saying on Twitter, I better bring out so many funds. I need to fix Alti first. What would fix Alti is for Bitcoin to start going back up. I mean, and I know it's not a Bitcoin fund, but like I say, it's all tied in. I like to see Bitcoin bouncing. That's good. Let's just stay on the 4-hour time frame and let's look at the SPY. Sometimes it's good to zoom out and see what's going on. Okay. I mean, that still looks fine. We need Bitcoin to go back to highs. I mean, it should, because the SPY's up there, or else the SPY is going to come down. It's part of the reason why I decided to reallocate up here. I thought we might be close to a high, so sell some winners. And when we go lower, get reallocated. All right. Well, anyway, SPY, Qs. All right. That's fine. Qs look strong. I mean, they turned around a little bit towards the end of the day, but you could still see we have solid potential support underneath with these open gaps. 620 could be a buy the dip, somewhere in that range if it gets there tomorrow. Even if more aggressive buy the dip would be 613, maybe buy one tranche at 620, one at 613. Then play for the bounce. All right, so that's the market report. Earnings went really well. I think Apple and Amazon look good. Hopefully, we'll get a bounce in the market tomorrow. Let's look at Qs after hours in Qs. See if they're going up after hours. I'm sure they are. They were last time I looked. Yeah, they're bouncing. They're up 1%. Heck yes. Heck yes. All right. Well, that's great. I'm glad to see that. All right. So now let's do the terrific trio. All right. We'll start with blocks. Now we looked at this. We already did this after the bell closed. So really we've already seen this. Blocks was down the most of the three, 5.42%. We don't need to rehash this. They were all down. I bet everyone's seen this that's already been here, but just real quick. So they had every stock in their portfolio down. LFGY had one stock that was up. It was up 2.82%, but they had most of the same similar stocks all down. But LFGY protects the capital a little better than Blocks does on the way down. And sure enough, it was down about half as much. Blocks just goes up so fast. I don't know how much it matters about the lack of downside protection, but you have to factor it all in. The Nalty's, was a beast that protected the capital on the downside. Scott set, he set the puts closer to the money, and really considering the stocks this has in its portfolio, it'd only be down 1.8%. That's not very bad. And they only had one stock, or they had two stocks up. They had Rigetti and MP. So that's the terrific trio. So now let's look at the lightning spread. I know we looked at this earlier. What we want here, this is total return on a daily basis. It's not on drip. This is total return, not factoring in drip. Say drip's a great idea, but it's kind of cheating to look at it to compare other stuff with. I just compare it to taking the dividends and putting them in your pocket. So but in any event, so between your pocket and the NAV value of QYLD, you would be up 5.14% in about, it looks like about a month, and the Qs would be up 4.9%. Okay, come on, guys. Then you can also look at it on a night by night basis, and you could see part of the reason we pulled ahead today is for some reason QLDY, which is not known for protecting capital. Lightning spreads aren't known for protecting capital on the downside. For whatever reason, it did a little bit better today on the downside, which isn't its usual. It usually is more like this on the downside, or like this, or like this, or like this. That typically, but sometimes it does give you a little buffer on the downside. So I'm not going to argue with it. I'm not going to try to worry about it. Now I wanted to show you something else. We look at this every night too. So this historical chart, basically, I look at every day. We could just look which one was ahead, and then I subtract how much the lightning spread won by. Anyway, the lightning spread is right now at 60%, so it's winning 6 times out of 10. I guess you could call that its edge, and that's about an option seller's edge. That's very typical to get that kind of results when you're selling options. But and then I just summed all these and averaged them, and that's your average edge, because that's how much you're averaging. So you were averaging 5 1/1000ths of a point, but that's our edge, So and that's good. It's really good, because typically I think that's good. Typically, covered call strategies will win 60% of the time. Correct. That's maybe even 65% of the time. But when you do this number, it'll be negative. They'll have a little bit of a negative edge because of the capped upside and the unlimited downside. So in any event, all right. But once again, this is total return. And you can see we've been winning. We were winning there. We've been behind, though. We fell behind right here and got behind, and we finally passed them right here. They passed us back yesterday, and we're back in front of them today. But whatever, as long as we're 1-to-1 with the NASDAQ, I mean, that's golden. That's what CA&Q does, right? CA&Q is basically close. It's not quite 1-to-1, but it's, it keeps up with the NASDAQ. This looks like it even keeps up better. But this one pays a better yield than CA&Q, right? Now, to be fair, CA&Q has a downside buffer. This one doesn't have a downside buffer. If the market's down 5% or something, this will be down 5.5%. There's no downside buffer. The lightning spread is more bullish. And so, in a big down move, this would be down whatever the market is plus a little bit, because those puts went in the money. So it would be down whatever the distance between the puts they sold was, minus the income they brought in. And just really quick, we could go back here and look at kind of what they've been doing as far as their puts. They've been selling 20, I hate these high numbers, 24,790 and 24,920. It's 130 points apart. So that's the risk in the trade. That's $13,000. Is that right? Yeah, $13,000 is the width between those strikes. Now they received a 42-point income, so it's 13,000 less 4,200 is whatever it is, 8,000, whatever. So in a really down move, a big down move, they're going to lose whatever the market loses, because they're long the market through the synthetic, plus this 8,000 or 9,000. So I mean that's the drawback of the lightning spread. All right. Well, anyway, we're done with the lightning spread. Sorry I have so many tabs open, but I really do want to show a lot of stuff on these tabs. I leave them open and I think we're going to need them. I mean, we could look at the new max. Oh, we've already done the max factor. All right. Well, let's look at the. Let's actually look at the big buck. You guys talk amongst yourself. What I'm wondering is why can't I want to do it where I can see you guys talking, but when I'm on this page, I would think you would show it in my corner down here. I mean, you guys can see what I'm looking at and the talking, right? I just wish it would put the chat here also. I have another screen tonight. I was just charging it because it's dead. All right, you guys talk amongst yourselves. I'm gonna find this buck. I was just going to show it on the iPad, but that's really unprofessional. Let me just email it to myself off the iPad. Somebody else recorded it for me. I have an iPhone 10 with not as good of a camera, but we recorded it on an iPhone, the one of the 14 or 15 with the cinema steady and all that stuff. It looks like a movie. So my apologies. I should have had this done. Give me just a second. But yeah, I'm having some kind of problem right now with posting videos to YouTube. When it says select videos on the iPad, it won't let me select it. So anyway, that's the only reason I haven't posted it to YouTube yet. It's just a technical problem, but we can actually look at it on the iPad, or I can email it to us. Is the series on tonight? I haven't checked. I don't think it is. It seems like they played 3 nights in a row. All right, so here we go. Use. And now it's compressing it. Anyway, it will just take a second. All right, well, what are you guys up to tonight? STRC debt structure. I was trying to say, specifications, but I couldn't think of the right word. But yes, it is just structured with different. I mean, preferred stocks they're like options. Sometimes they have a strike price, or it's not really a strike price, but a price that if the stock gets to, something happens. So anyway, yeah, debt structure. Jonathan's, he knows all about that kind of stuff. But STRC is impressive. Now, isn't that the one that they're trying to make like a synthetic stable coin, and it trades it, or they're trying to keep the goal is to keep it close to the price? Or no, that's the one. The stable coin one, I think, is STRD. STRC is more like an equity. Jonathan, help me out. Tell me what it is. Okay, it's primary position. It's a convertible. Yes, convertible. That's what I was thinking. So it converts to stock. If the stock gets to $1,000 and you get 10 to 1 on your money, yes. Okay, so I was calling that specifications. If it was a crypto, they call that a smart contract, or they would call that it's like a contract. It's it's the levels or whatever. But yeah, it's a convertible bond. When I was in wealth management, I don't think I sold one convertible bond. I mean, I did sell bonds to one person that wanted bonds. I sold $1 million worth of government bonds. It was the biggest single trade I did that year. I made a huge commission. I sold $1 million of 30-year to somebody, but no convertibles and stuff. All right, so Marcus is saying ACEI is Innovator's new auto-callable. We need to put that on the max factor. I'm going to get this deer thing out of the way first, but we'll put on the max factor. It's been around 3 months. By the next time we have Liquid Alt Thursday, we'll have that one in there as well. But yeah, CanQ is impressive. CanQ is really impressive. Easy Life, what are you saying? Oh, you'll get a new anchor tomorrow? Yeah, CAIE versus CanQ versus SpyG. Heck yeah. Anyway, Jonathan, I see what you're saying, Ron. But point is, they all have different levels and different things. So they trade a little bit different, but they're all issued by strategy. Yeah, shout out to Rod. I couldn't believe that. Like 41, that's very average. That's what we, 41, 51, and that's great. But I was seeing 200, and I was like, holy, I don't know what to say. And plus the messages were coming in so fast, I couldn't keep up with them, and I forgot which ones I'd already read. It was you. Okay. Well, anyway, could you see better tonight? You could. Okay. I'll try to make it. I'll make it bigger natively so we won't have to zoom in and zoom out. But it's more fun when we can't see the final result, and we can kind of guess at it. You guys can probably reverse engineer my algorithm, or you see my inputs, and then you can look at two things next to each other. You can kind of. I definitely want this to make sense. I mean, like I say. You have two assets and they both have the same total return, but one is super volatile and one is not volatile at all. To me, the not volatile one at all is the more valuable one because they end up in the same place. But that's not realistic. No asset ever just goes straight, like other than like a box spread fund. Since that's not realistic, for something to have no volatility, then we can use the metric to measure different levels of volatility, different levels of risk, first reward. And anyway, I really like that feature. You feel bad you barely made Rod to a Rod video anymore. Yeah, the times I listen to him is times when I get up and I can't fall back to sleep. I get up like at 5 o'clock and I'll flip on the YouTube on my big screen. And yeah, he'll be there doing his live stream. So then I'll have to get the computer. I'll open up the computer and sit in bed and start talking to the guys. But I do that maybe a couple times a month. I don't think Rod needs this at his lives anymore. I mean, he probably appreciates this, but he I watched his lives for months, probably 6 months. I'm in the 55-inch TV in the garage and I'm squinting to see the numbers. Yeah, I have about a 55 in front of me. Well, we'll make it better. Glad you clicked. Those Calamos funds do get noggin jogging. Heck yeah, Screeching Possum or Pa. I'll just start calling you Possum. Let's see. Okay, yeah, we'll look at those. I'm going to put those in the max factor in a second. I think the Mel's here. So you've got Mel. Remember that? You've got Mel. You've got Mel. Was that a decent imitation of a modem? I don't know. Oh, gosh. Oh, gosh. I hope I don't have anything for my penis enlargement cream, any emails from the penis enlargement cream company in here, and you guys just saw it. That'd be really embarrassing. I'm just joking. All right, guys, here we go. Oh, we'll download this. I guess make it run a little bit smoother. We won't run it there. All right. Here we go. Here's the big buck. His name is Haas. I always name them that reminds me of their physical features. Nine points. It's a 9-pointer. He's gorgeous. Look at his neck. His neck is swollen because he has all the testosterone. That's how you can tell the rut's on. They get a real powerful neck and they show the testosterone in their neck. But look at that rack. Look at that. I mean, for a city buck, I've seen bigger bucks and stuff on people's walls, I mean, he's a monster. Look at his swollen neck and look at his gray muzzle. I figure he's 5 or 6. You can see back here his nutsack hanging down. I mean, this guy look at that. Is that not the most beautiful animal? Right there. Oh my gosh. He's gorgeous. I mean, that animal is gorgeous. See that muscular neck? I mean, he's always muscular, but they get swole. They get swole when they're on the hunt. Now look at that. That is gorgeous. And he's so nice. A country buck would never let you get close to him. I mean, he was, we've lived here 5 years. He probably, he could have been one of the bucks that was born behind our house. I mean, when we water him, I give him water every day. But this guy is a monster. Look at this again. Look at him walking up. Look how his rack isn't just wide. It's also tall. It's also thick. I've seen thicker ones, but man, that's an animal right there. That is an animal. What do you guys think? Do I have any hunters in the audience? Do you think he's a 5-year-old? What would you say if you had to estimate it? All I know is, man, that's an impressive pair that he's hanging back there. That is impressive. This guy doesn't need any type of penis enlargement cream. All right. What's my favorite exchange for buying funds? You mean like crypto exchange, like Coinbase or whatever? Because on the stock exchange, it doesn't, they're all electronic and they just route your order wherever. In the old days, it used to make a difference if you went to the Philadelphia exchange or the PICO, which was what they call the Pacific Coast, or, depending on what option you were trading, you would try to route it to a better, or your broker would try to route it to a better, maybe a market maker that they had a relationship with, and maybe to trade like Microsoft options, you'd have to go to the P Coast because in San Francisco, or out Silicon Valley stuff might be out there. Philadelphia might have something. And then New York had, if you're trading commodity options, they had the NYMEX. That's where Mike Coe got his start, I think is on the NYMEX. But yeah, I think in the old day, options exchanges mattered more. But with electronics and stuff, they just routed instantly to the lowest price from what I've heard. All right. I hear you, Grumpy. Yeah, watching Rod's videos. Yeah, Bitcoin's bouncing. Now, that was a 4-hour chart. Let's go to a 30-minute chart and make sure it's really bouncing. Sometimes when I switch time frames, I'm used to looking at 30-minute, and then it throws me off. Let's look at Bitcoin futures. Or we could look at Bitcoin on Coinbase. I just think futures we'll look at Coinbase. Now let's look at a 30-minute Coinbase chart. But yeah, it's bouncing. Heck yes. Well, okay, on the 30-minute chart, it's bouncing and it hit a trend line. What's it? A perfect trend line, descending trend line, or whatever they call that. Or also known as a bull wedge. Could be known as a bull wedge, right? I always look at the trading ranges. I'm obsessed with, right here in 109 is kind of no man's land where we're at now. It'll probably get attracted back here to 107, or hopefully it'll get up here in this trading range. But there's kind of two trading ranges, and then there's a spot in between where hasn't been very much liquidity so far. So, and it could always build it out here. It can stay here, and it could start filling this range out or whatever. It can do anything it wants, but come on, Bitcoin. Scott Snyder. He was on the live stream 2 nights ago, and he made a comment, and I didn't know who he was. And he was talking about selling puts. I thought it was one of you guys. Not that there's anything wrong with one of you guys. I hear strategies all day long. Hey Max, I'm gonna start selling put spreads this week. I'm gonna do whatever. And then so somebody, the comment said, yeah, I'm selling those put spreads first thing in the morning, then in the evening. And I was just kind of messing with them. I said, you ought to do a tranche in the middle of the day. I had no idea it was Scott. He was talking about Alti. They were doing half the position on the open and then half on the close to kind of alleviate that, because they were getting burned by some big opening gaps. And anyway, I finally figured out who it was. But yeah, I was just afraid I made a fool out of myself. I wish he'd come back on again. Next time I'm going to know. That's why I always check back in and look, so I make sure I'm not over here talking about girls or something, and that he's on here, because he's on the East Coast. Like, I'm going to check right now and make sure he's not in the comments. I wish there was a way for me to get a text if he shows up in the comments. But let me make sure he's not here because I just want to answer his question first and go to sleep. We could sit here all night and talk about sports or music or girls or whatever. Yeah, deer are beautiful animals. Okay, there's no Scott around, but yeah, he's Alti's manager. He is Alti's manager. Oh, and also, but when he was on 2 nights ago, he said yes, because I said I bet Scott scooted his strikes closer, his put strikes, because they run a caller, so you can adjust where the caller is. You can move your calls in, you can move your puts in, you move your calls out. You can move one in and one out, whatever. And I said, because it was some day the market was getting crushed and Alti was only down half a point. The market was down like 1.5 points. And he said, then he made a comment, yes, we kept our put strikes where they're at. And lots of our puts are in the money right now. When he said that, and it said Scott, I was like, oh my God, it's Scott Snyder. I said, well, anyway, so, it's been working out really well for him. I don't know if you guys heard Ambassador's show today, but I loved what Mike Coe said. He was, anyway, we'll talk about that in a little bit, but that was a good show. But who has 1 million of bonds? Hey, J-Pod. Dylan's here. I've never met J-Pod or Dylan, but you guys all know each other. That's good. I showed, did you see that? You saw the buck, Mike, right? I don't know how far away these are. Oh, you skipped away for a couple of minutes? You want to, I can hear, or did I? It's right here. All right. Are you watching now, Michael? You wouldn't want to get that close to a buck in the country or whatever. Bucks can, I mean, I've heard of a buck killing a person, going, but this, my friend with the good camera, I told him about it, and he walked up probably 10 foot away, kneeled down, filmed it. And then when he was done eating, we threw him romaine. You aren't supposed to feed him. We threw some romaine so we could get a good picture of him, but we threw him a whole thing of romaine, and he's just going to town. But then as soon as he gets done, my friend just stands up slowly and just backs away, and he just looks at us like whatever. I mean, they are so these city bucks are domesticated, but because people feed them and people are nice to them. Cars stop for them in the city, I mean, cars in my neighborhood will slow down and look out for him. But look at that. He is so gorgeous. Look at that face. Holy cow. All right. You see him stomp right there? That means when a buck does that, when he stomps his feet, it means he's mad, like a teenage kid, or like they stomp their feet. But that's just a little warning. Hey, if I have to, I might have to charge. But they give you a lot of stomp warnings. I've never had one charge me. And the does do it too. The does get uncomfortable the does are really domesticated, but sometimes they don't like you being around, and so they'll do the stomp thing too. Anyway, I hope you saw that, Michael. But yeah, he was pretty. We were close. We were very close to him. He was probably 10 feet away. Yeah, I was just joking. I actually don't have any of those. But when I was opening my letters, I was thinking, I wonder if I have anything in here that's like, maybe I've been talking to Jay Pestruccelli about a new fund or something. Maybe we've been emailing back and forth. And he's emailed me before, and not lately, but told me not to say anything. And we're going back and forth and working on something. So I was thinking, I wonder if I have anything in here that would be incriminating. And then I always have to turn it into something funny to say. And so I said, anyway, yeah, we are so spoiled. But remember back in the day, I remember the one of the happiest I've ever been is when we finally got, and I was one of the first people to have it. We finally got high speed. High speed wasn't really high speed, but it was so wonderful because you had 2 line. Because I used to like to bet on basketball games I was probably 28, 29. I used to like to play over-unders on basketball games. Well, I had an online account somewhere. This is about 95. And I would use broadcast.com to listen to the games. And sometimes you could even watch them. I'd use the internet for that kind of stuff. And I can't tell you how many times I went and I signed on, and my wife was on the phone in the other room, and she's on the phone, and it goes, damn it, Mike, or sometimes I'd be on the phone. She would do it. It was just such a pain that you couldn't use the phone and the internet at the same time. I guess unless you had two lines, but high speed solved that. Like I say, it wasn't really high speed. But anyway, that buck's beautiful. I hope everyone saw it that time. It is impressive. Deers are beautiful animals. They're so friendly and peaceful. We have does that'll let us feed them, and we'll name those too. We've had two of them. The first one's name we named Diane, but she would walk right up to us, and we'd feed her carrots, and we could pat the back of her neck. And I mean, so nice. And then we had another one, and we have some that are kind of skittish. I have one called Soda Pop that doesn't let me feed her, but she's had like 3 sets of kids. She had 2 bucks in 2021. And they grew up, and I mean, it's 2025 now. If that deer's 4 years old, it's conceivable that could have been one of Soda Pop's twins. She had a big giant twin and a smaller twin. I named them after ball players. I named them after Oklahoma Sooner quarterbacks, but whatever. But I wonder if Caleb was the stud back then, Caleb Williams. And Caleb was the big buck that Soda Pop had in 2021. I wonder if that's Caleb. And maybe, I mean, I don't know. But he's a monster. But I think that buck looked older than 5 years old. Yes, we're covering ULTY with Ambassador, and we're going to cover it again, or we're actually going to cover ULTI, and we're going to cover KYLD Saturday morning with ETF Inspector, ETF Delta. And Ambassador, if you're still here, I have another influencer that if you're looking for another influencer, let me know. I have a good friend that's an influencer that he could be on the show too if you want another person. If not, that's fine. Anyway, having 2 lines was really expensive. Back in the day, calling long distance was expensive. If you're at college and and your aunt's or whatever, your mom's in California and you're going to college in New York or something, you'd have to save money to. I remember my girlfriend, who was my wife, that was mad at me for picking up the phone line. But before she was my wife, she was my girlfriend. She was in Hawaii on business for like 3 months. And I would save up my quarters, and I would go and use a payphone because I just didn't want to get a phone bill. And I would go put like $20 a quarters in a payphone, pull up in a car, and I could talk to her for, 15 minutes or something. But there's a lot of money for long distance. That was crazy. One of my friends is still sentimental for that. He loves that modem sound. Even though it's ugly and stuff, it just reminds him of the 90s. He loves when he hears it. Anyway, that's good, Dylan. Thank you so much. I mentioned that I hadn't heard of you. I said, who's Dylan? Anyway, I hadn't seen you in here before. I will be looking out for you in the future. All right, so let's do this. Let's do this. Let's do a buffer report, a real buffer report. Let's look at little 3-month results. All right, and let's look at every high yield fund out there. And what do you guys think the best 3-month fund is? It's probably Palti, right? I mean, or Hui maybe, or HOW maybe, or something. Anyway, let's just go kind of check it out. I guess we're through with earnings for this week. I mean, there might be some tomorrow, but we're basically done. I looked at the earnings next week. Well, I guess we can look at those in a second on this wonderful piece of software. The address for this, stocktools.app, is stocktools.app/max is my affiliate code. It's a good piece of software. Maybe somebody's here like Dylan that wants to, or somebody that's not in our Discord that wants to be. No pressure if you don't do Discord, that's fine. But let me put the Discord link up there and maybe my affiliate link, and we'll go from there. All right, how does that sound? All right, here's the Discord link. Come introduce yourself. We're really friendly in there. A lot of people are really eager to help. Marcus, whose name is Skeptic in here, would be glad to answer questions. We have a lot of really helpful guys in there. Carl, did you join the Discord? I thought for some reason you were maybe in the Discord. All right, perfect, Dylan. We got Dylan joining Discord. And then also you can test this out, no credit card, for like 2 weeks. You get 2 weeks free, and then you have to put down a credit card. But then if you sign up under Max, you get the first month free. So you essentially get 6 weeks, 2 of them without a credit card. Then you put down your credit card. And then if you keep it another 2 months, I get $20. And I haven't got any, but I really believe in this product. But just to be upfront, there's something in it for me, but I really like this. I mean, I use it every day. And so anyway, let's just kind of look at what it is. But like I say, no pressure. You may already have other tools, but this guy that develops this is a smart guy named Rob. He's a friend of the channel. He's on the live stream sometimes too. He's on the East Coast. He's probably asleep right now, or he's probably coding. He's a genius, or he's a genius app developer. He worked for NVIDIA, and he was head of their graphic or UI team, user interface, or something like that. Anyway, and he led up a team of like 50 engineers or whatever. Anyway, he's retired now, and but he's building his own things, and this is his passion project. He's an option bro, and he's trying to build out a lot of the features from Tasty Trade. This has a back tester in it. It has a bunch of the similar stuff that Tasty Trade has. It's only $19.99 a month. It's fairly reasonable, but this is what I use it for every day. You can compare any high yield ETF, and it'll show you the high yield ETFs. Number one is GOOW. You should have known. Google's been on a tear. But then it shows you what the underlying is. So this shows you the GOOW from Round Hill was up 57%. And the parent asset, Google itself, was up 48%. So it outperformed by 8.5%. That's really good. And during the past 3 months, it paid a 16.2% dividend, which annualizes to 65%. And it has a NAV stability rating over here. It has growing NAV stability. So this is really handy especially when you're looking for stuff. But anyway, let's just look at the top 10, and then I'll show you some other stuff. AMDW, TSLW, TS2, AMD's a good one. HOW, I figured that one might be number one. AAPW, and then TSLY, TSLP, good stuff. But then let me show you something else. So here's what's really cool. Let's say we want to say, I'm thinking about getting I'm trying to decide between Round Hill and Rex. Which one should I get? I mean, they're both good. I just don't know. So what you can do here is you can select Round Hill. That gets you all their weekly pays. And then you can select the Rex growth and income. And we'll select the other Rex also. And then you could say, and also maybe I want some yield max, the multi-stock yield maxes. So the LFGYs, the chippies of the world. I want to throw those into the comparison. And then I also want to look at the granted shares. And because I'm thinking, something like that. I just want to know out of those are the companies I like. What can we do here? And it'll make you a custom buffer report for just that, for those securities. All right. And so we can go back, and then without selecting securities or anything, you can look at the 1 day performance, the 1 week, the 1 month, 3 months, 6 month. Anyway, we'll stay on 3 months to stick with the theme. Actually, it's the last day of October. Let's do a 1 month, or it's the second to last day. Let's do a 1 month, and let's look at October. This got to be Google, right? No, AMDW, yeah. So on a 1 month basis, out of all the universe we selected, you could see that the Round Hills first and second, but then we have AMYY from Granite Shares coming in third. Does Round Hill have an AMDW or something? I'm surprised that I don't think Round Hill does have an AMD, or if they do, it's not on this list. Surely they have an AMDW, but you would expect it. I would expect it to be Granite shares, but I'd at least expect it to be somewhere in the top 20. Maybe it really is a yield trap. But anyway, but it's just cool because you can make subsets. And wonder if you're a person that's you only do round hill. Well, you can just line up only round hill. You don't even have to compare it to anything. You can just look at all the round hill funds by themselves. And so for somebody like me that doesn't like single stocks, you can look at like SPY covered calls, 14 of them. That's going to get you the good index ones. Then there's IWM and then there's Qs. I love, I'm obsessed with the index ones. And then I'm also obsessed with the multiple stock yield maxes. I mean, LFGY and ULTY to me are just awesome funds. All right, but let's just line all those up together and see the past month who the champion is. Look at that old Chippy. But Chippy's beating the Qs badly and paying a yield. I mean, Soxy, the same thing. Now, Soxy's, I get mixed up. Soxy's the target fund and Chippy's uncapped, right? Or there's Chippy capped. I think Chippy's the target fund and Soxy's uncapped. Anyway, one of them just makes as much as it can, and one of them is as a 12% target. Well, we can look at that here. So then you can even drill in another level deeper. I know a lot of you guys have seen this, but I'm doing this for the new guys. So then you could click right here, and then you have a dividend calculator. So you have your this is 1 month performance with and it shows you Chippy beating the Qs, and then you can also check dividends reinvested, or you could check just if you want to look at just NAV without dividends, you can click just NAV, and then you can, or if you want to look at total return, so it's winning on both, or no, on NAV it's behind, but then when you kick in, look at this. On NAV, Qs are ahead, of course. But then when you factor in the dividends, Chippy's dominating. Anyway, but then down here, this is the coolest thing. This is basically dividend calculator. This has a start date, the end date, so it'll show you a month. It'll show you your state if you're on drip, starting shares, ending shares, dividends reinvested. I mean, this is just so much detail. And then if that wasn't enough, then you can click on this tab, income analysis. And this is a future value calculator. You can put how much you start with and, all that kind of stuff. But what I really like is this dividend data. And this is where I was saying we could see for which one was a target fund. And Chippy's the target, or no, Chippy must be unlimited because it's 9% monthly. Is that right? Well, anyway, we'll look here in a second. I guess Chippy's the higher paying one. But then if you want to see, so it's monthly, and then you can see what their payments were. And you could see that it's very consistent. Well, it was paying the same for 3 months in a row. Then it made a bigger payment. Then it dropped back down to the same, but you can kind of see a graph of it. And it gets better when you have more. When you have more months. But this one's kind of new. So yeah, this is incredible. This is absolutely, it's an incredible tool. All right, so let's just look at the 1 day results. AIPI, wow, had a heck of a day, and beat its parent. And paid a. I guess it paid a dividend today. It paid 2.98. It went X today, evidently, because most of them didn't pay. But anyway, there's old Will. Marcus likes that stock as well, I believe. It's doing well. I mean, it did well today. It beat its parent and whatever. The 1 day results are kind of a short time frame. But anyway, that is beyond cool. And then look at this dividend calendar. If you guys got any questions, put them in here, and then I'll let you go after that, unless we start talking about something. I have to go prepare for tomorrow's going to be a big day. I have a bunch of stuff planned for tomorrow. So that's kind of why else I did this early. But so these are, I guess, next week's dividend. No, this is this week's dividends, right? No, it's next week's. This is next week's dividends. So we have McCormick. We have, is that Pepsi? PP? Or is that something else? Pep Boys. That's Pep Boys. Or that's something else. Pepsi's owned by Mondelez. Or so Pepsi's owned by another company, I think. Caterpillar has earnings on the 6th. Boy, there's not a lot of earnings that 2 weeks from now. Sometimes they put more in here, but then 3 weeks from now, we have healthcare. We have Johnson & Johnson. I think something's wrong with McCormick because it's in both weeks. Maybe they switched their date or something. I don't really see any earnings coming up that I'm really excited about, meaning no liquid tech stocks, no Google, Apple. All those were this week. I'm sure there's some in there somewhere. There's some in there somewhere. I just don't see any off the top of my hat. And then there's all kinds of stuff for options. I mean, we can't even, there's too much stuff to even get into, but poor man's cover call calculator. We'll look at this on some other live stream. All right, guys. Well, I wonder how I get this. I guess I need to watch a video on how to use this StreamYard, because it would be really good if they would overlay your talk while I'm looking at other monitors. While I'm going from screen to screen. Dylan, you feel like Blocks is solid due to lower yield, but just recently moved to WPay. Yeah, I think Blocks and WPay should be similar. I think they both should get a lot of upside and a lot of downside. I mean, they're both growthier types. Yes, they pay a yield, but they're on the growthier side of yield. Some of them are more like Alti, strictly a yield fund, pretty much. Anything that's fully capped, especially a caller and is capped on the downside, they turn it into like a less growthy and more yieldy. But then you have things like LFGY, it's more growthy that compared to Alti. And then you have Blocks and WPay, and it's even a little bit more growthy. So let's look at this. Let's go Blocks versus WPay. I mean, they're two good choices. I mean, I have both of them. Blocks, you can tell Blocks is quite a bit more volatile. So now it's been benefiting lately in a bullish market, but you can imagine in a bearish market, it looks like Blocks would probably be down a little bit more than WPay, but it'd be hard to say. All right, well, let's look at something else. Yeah, it is interesting, and it's worth the try, especially for no credit card even required. Go try it out for 2 weeks. If you like it, that's great. If you don't, no hard feelings. It's wonderful. You had Alti before. You just closed your position. I closed my position. I closed some of it because I was trying to catch the high. The market just looked too high, but I still have a lot of it. I still have about 2/3 of my original position. So you had it, but you just closed it this week from August. Closed out green. So you're the high yield, you held it long enough for the high yield bailed you out. That's good because that doesn't always, it doesn't always happen, but yeah. So what are you going to replace it with? Do you have any ideas, Dylan? Let's look at Alti versus WPay for the past quarter. Alti's just, fallen off. It was doing great, and it's just it's been having issues lately. It's still up. I mean, that's since September, and it's up on total return. Or no, that's since July, and you're saying since August. It's probably barely up since August. But you put your time in, and yeah, if you got it September 4th, it's up on total return. Not bad. Of course, the NAV went from 548 to 47. That's not that bad. I mean, not great, but you made 90 cents. Yeah. Anyway, I'm glad you got out in one piece if you want out. So I'm thinking maybe you got blocks because you're talking about it up. Oh no, you recently moved to WPay. Okay, perfect. That I think that's a good one. I'll tell you what else is a good one. I mean, I don't see anything the matter with WiMAX, and don't tell me it's because it has Murney. It's whatever. I mean, that doesn't matter to me. It's an index. Indexes have some bad stocks, some good stocks. That's the way it works. Murney could be good next year or something. WPay probably has a stock that's lagging also. So I like law of large numbers and stuff. But WPay looks a lot better than WiMAX. But I think WiMAX could make a decent investment. Look at the NAV went from 12.55 to 11.95. I mean, 60 cents, but it paid $1.42. That'll work. I look at old WPay though; its NAV is up. And you got to, yeah, WPay's looking good. WPay is definitely looking good. I have all of them. I have let me show you. Let's look, because this might be one other thing to look at. Then you guys can really go. Let's see. I have it. I think maybe I closed it because I wasn't planning on looking at this tonight. Yeah. Let me show you what I have going on. I call it the four horsemen, but I'm trying to build I want the main drivers of my portfolio to be Alti. I love Alti. It has great protection on the downside compared to any of those other ones we're looking at. It'll do way better in the down market. Then I have WPay and QLDY and blocks. But then I'm also going to use some BITK for some direct Bitcoin exposure. So I don't know where it went to, but anyway, I have an infographic somewhere that has my positions. I was trying to open it so we could look at it really quick. I don't know. All right, guys. Well, what else you guys want to talk about? Put anything else in there you want to talk about. If not, like I said, I can let you go. All right. So Dylan's talking my language because he's talking about these high Murney and stuff. I want to see that. So you rolled most of WPay and you got 51.25 on average. Great. Perfect. Your average Alti is 520. My average, well, good for you. My average is 720 or something. And I made like 30%. Now I was on 100% drip. So, but even without drip, I made like 24%. With drip, it was like 29 or 30. And I really only want no more than about 20, maybe at most 25. I mean, I really like Alti. I mean, 25 be all right, 20 maybe. So I just took it down from 29 and I missed that. I was trying to land on 20 and I landed on 18. But so right now I have about 18 and that's what I'm trying to show you. But okay, so what are you saying about Murney? Murney, if you take the company away, just look at the numbers. Mine just paid over 3 cents. I mean, I agree that I'm not trying to say it's not a dog, but all these people say, well, WiMAX would be all right if they took the junk out. Well, how do you take the junk out? I mean, take Murney out, but it may not be junk next time. It's a fund of funds. I mean, if they want it, they want to take Murney out, they just need to drop it from WiMAX. They maybe just need to quit selling it. I'd be fine with that. But I think people want to do WiMAX, the fund of funds, but just leave Murney out because Murney, they look at it and their Murney's killing this. That's not how it works. I mean, I expect WiMAX to have everything that YieldMax offers, just like I would say the same thing about WPay. I bet WPay has something that's doing poorly right now. I mean, it may not be Murney, but they, and the thing is, that's the whole thing about an index. You never know what next year, it could be the hottest thing ever. A few years ago, people would want to drop Tesla from WiMAX if it was out a few years ago, because Tesla was the worst performing YieldMax fund for a while. When its underlying Tesla dropped 60% in like 2023. So I just like the law of large numbers. You drip most dividends, okay. Agreeing with the dropping, but the strategy works, improves it. So, I mean, let's look at let's look at this. Murney, I mean, I get that it's frustrating. Okay, so here's something interesting. And I never really thought about this before, but in bad stocks, you don't want to drip. Because you're compounding losers now, but you don't know in advance if it's going to be a bad. You can't predict the future. But look here, when you drip, you did worse than if you don't drip. Anyway, but in either event, you do a little bit better than the underlying, which isn't saying much. I mean, Moderna's down, and that's just in a quarter. Oh no, that's since inception. I mean, I wonder if you could hold this. Well, I was going to say, I wonder if you could hold this long enough where the drip would make you positive, but it doesn't look like it because the drip is just making you more negative. You need the drip's fine, but you also would need Moderna to start going up at least a little bit. It has to start, because if it would turn around and go up, then you actually start benefiting from the lower prices that you drip at. But when it just keeps dropping, the drip actually hurts you. It actually hurts you. All right. Did I miss anyone's questions? Yeah, Will is highly underrated. Markets, I'll agree with you. Didn't do very well on the last night's show, or we did a show the other night. Anyway, so let's talk about tomorrow night's daily factor. I think maybe we'll have NASDAQ Friday and SPY Saturday. So we're going to line up all the NASDAQ funds. So that means triple QY. That means triple QI. That means triple Q anything. TDAC is a good one that just came out. I think it may be too new to be in the max factor. But we're going to line up all the Q funds tomorrow night, and we're going to do the same thing we did tonight. And I'll try to make this zooming issue better and stuff. All right, guys. Well, I certainly appreciate you being here. I'm going to go to bed early tonight. I'm going to get up first thing in the morning, probably like at 5 o'clock in the morning, and hit refresh on the websites for Rex and for Curve. I think Curve's positions will be published in the morning. So that first thing in the morning is what Howard said. So I'm going to try to be the first influencer to get a video out. Or maybe then probably somebody else will get one out first. But I'm going to try to be one of the first ones. But none of the other people are going to be talking about the option strategy. I mean, they may read what it is, but I'm going to try to get in the middle of what they're doing. What I kind of suspect, and this is what I'm hoping, I don't know if I'll be able to tell by tomorrow morning if this is the case, but I'm really hoping Rex especially is doing lightning spreads and also callers, because it kind of implies, but they're doing lightning spreads when they expect higher prices. So in a bullish market, they should look more like blocks, but then in a bearish market, they should look more like Alti. And their prospectus kind of hints at that. Their prospectus says we're going to sell options in such a way we have extra upside in the bullish if we anticipate higher prices. If we anticipate lower prices, we're still going to sell options. Checks, I'm not going to hang on. And it says if we're anticipating lower prices, we're going to sell options in such a way to cap our downside or something. So that would be awesome. That would be a killer fund. I mean, that's what the Rex prospectus said. The Curve prospectus really didn't give away much. They can basically do anything, and they can, So anyway, I just can't wait for that tomorrow. So hopefully by the time you guys wake up, I'll get up and I'm going to try to type out my script tonight, Jackson, and kind of make a template. And then I get up when I see the positions, it's going to be, I'm going to be right, Johnny, on the spot. And I'm going to be and I'm going to have the best information, not be the first one out, but it's going to be the best option information. But that's unless ETF Delta and Spectre beats me to it. They're really good at options also. But it'll be better than all the other just normal influencers. All right, just the clickbait influencers. There's going to be a lot of clickbait, and there already has been a lot of clickbait related to Killed and related to ULTI. But ULTI, based on the prospectus, could be the next. Could be the next big thing if they could actually make it get extra upside on the way up, and work like Alti on the way down, where it's protected. Well, guys, thank you so much. Yeah, be looking for that video tomorrow. Thank you for being here, Dylan. It's good meeting you. We'll see you over there in Discord. And there's probably other people. There's 46 of you here. Lots of people don't comment. Somebody come say hi to us in Discord if you want. All right, guys. Thank you very much. And you guys have a nice evening, and I'll talk to you later.